Frank Dumas, Director of St. George Eco Mining, is back with us. And today we are going to be discussing the battery recycling component of that business, that is the subsidiary EVSX.
So EVSX is a company that we created in 2021, in the first part of 2021. This is not something we were expecting to do. Again, it's a bit outside the core. It's not exploration. It's not metallurgical process per se. It's processing of batteries. We've been approached by certain individuals that were into other companies with the intention of doing battery recycling. They were getting into grants. They were getting into big investment. This was something that was very popular in 2020, 2021. And some people approach us and said, well, you have some patents that are adjacent, or provisional patents that are adjacent to this business. Why aren't you in this business? And so, look, we don't think that you're going to have enough of a critical mass of EV batteries, of electric vehicle batteries coming back to the market to make this profitable this year. It's going to take a few years before this market mature. And also, we know nothing about it, because we didn't run any test. And so these people kind of convinced us to run tests. We got our hands on a few tons of EV battery from different car makers. And we ran some tests to realize, okay, we're able to get in the 90% plus recovery of the critical metals. It's worth it to do some research on this, which we started in, I'd say, mid-2021. And right away, we start a pre-feasibility study to figure out if it was interesting to put a plan in place. We realized that a lot of companies were in that field. They were very well financed. They were putting big money behind the research, behind the development. And we were coming in a little bit late and with not much money also to assign to that. And today, it's probably what saved us. We're still standing. A lot of these companies that people were telling us, this is your competitor, you're never going to be able to compete, they're too big, they have hundreds of millions of money invest, and these people are bankrupt. Recently, in the last few months, two of these big companies in the US and Canada went bankrupt. We now talk to the downstream partners they had that are coming to work with us, because they realize, okay, you might be the last standing in some of the niche projects that you went after. So we realize, okay, how do we do this? How do we bridge the gap between today and when the EV battery market for recycling is going to be mature? Because the EV batteries, they go into the car, they end up being 6, 7 years, 10 years, depending on the type of car in operation. And then they usually get either change or the car end up being total. And outside of accident or battery that get damaged, the batteries that are just out of commission because they're below a certain percentage of charge, of maximum charge, well, they often get repurposed. So they end up, batteries that you put with your solar panel at your cottage or things like that. And that means that they're going to last another 10, 15 years before they come to the final end. They have the end of their life cycle, and we can finally recycle them. So that means two things. We had to look at the opportunity of getting batteries that can be repurposed, which is part of the business also for the EV batteries. And we needed to find also other batteries that are not in sync with that life cycle. And that means batteries for backup systems, for computer farms, for data centers, batteries that you have in telecommunication towers, things that will not be repurposed, that will definitely get discarded, and that are still very valuable to recycle. And then we got approached by an entity that's called Call to Recycle. It's in the US and Canada. It's the biggest recycler or collector of domestic and commercial batteries. So that's from your AA, AAA alkaline batteries to your computer, cell phone, mobile device, lithium-ion batteries. And suddenly there was a good amount of tonnage per year, and they had to jump through hoops to find people to recycle them. And a lot of it was just crushing these batteries and shipping them to China for processing. And that's not part of their mandate. They wanted somebody that was able to bring it to a level where it can be refined in North America. And that's where we are now. So we had some setback. It was a lot longer than we were expecting at the beginning. Keep in mind that uh, anybody in this business that comes out and said that they have a solution ready to go, and that's going to work, that's going to be economical across 15 different type of chemistry of batteries, they're probably misleading themselves, because there's a lot that you learn as you test these batteries, not in the lab like we did, not in the pilot plant, but really in a real commercial environment. And how do you keep costs down also? Because this is something that there's big margin on certain type of chemistry, a very fantastic margin on some of these chemistry, and not necessarily the chemistry that people think of. And I'm not going to get into too much details on this, but the EV batteries might right now be the one that, in a pure conceptual study, is very profitable. But when you get to dismantle these batteries, you learn about other costs. And there's a lot of it that has to do with just safety of your worker and how you handle it, and the logistics of storing and moving these batteries along the processing line. They're still profitable. These are batteries that, if you have a low cost process, should turn out a profit. And maybe not on the front end, but on the back end, if the quality of your black mass is there, there is buyer for it. And the other ones, which is right now the main amount of batteries we're getting, the one that we wanted to bridge the gap until the other ones become the majority, is the alkaline batteries and the nickel cadmium batteries, and also the lithium iron phosphate batteries. So things that you find into either the the low end range of the AV cars, or you're going to find also in golf carts and many other applications where they're going to have life for LEFE, so for life iron, lithium iron batteries. Now, these batteries for us, we're receiving a tipping fee to process them. So our goal at the plant in Thorold, Ontario, where we install our first plant, was to make sure that every single chemistry of batteries we would process is going to make us money. That we don't have any loose gainer, that we don't have half of the battery we lose money on just to be able to receive the other half. And that has been a challenge. There's some of these batteries that we need to attain a certain tonnage per hour to not only break even, but actually turning out a little bit of net revenue on top. And that's the challenge that we've been working on since the month of June this year. So we had the line in place, realized certain part of the line on certain chemistry of batteries were delaying or reducing the potential volume we were making or we were processing. And we've made the adjustment. And we're about to be in a position where we're going to make money on the vast majority of chemistry of batteries.
Frank, can you tell us why you think that EVSX is still standing while its other competitors have failed?
Well, we've interacted with a lot of equipment makers in the last few years, especially in the last year, because we had what we thought was a complete line. It is for lithium ions and for most of the lithium chemistry. But when you input alkaline batteries, nickel cadmium, there's other challenge with different minerals or different part of these batteries. That could slow down the line or cause the line to be clogged or require maintenance more often. And as we were doing these upgrades, we were looking at the same providers of equipment manufacturers and the other companies that spend hundreds of millions of dollars when we spent less than $10 million on our line. And we're talking about people that spend hundreds of millions for less capacity than we will have at full operation. And we realized, okay, a lot of people are just shooting in the dark. They don't know. They're coming up with a solution, they're running with it, they have a problem, they throw money at it. So what you had was a lot of academics, PhD, post PhD, that suddenly had access to a manager with hundreds of millions of dollars in the treasury. And when they were running into problems, the manager were just throwing money at them, saying, come up with a solution. And some of these solutions are ludicrous. I'm friendly on a friendly base, and I've got acquaintance that were in some of the company that went bankrupt recently. And we're talking about things like we replace the front end, so shredder and things like that recently. We upgraded it. And we've done that with very little amount of money compared to the amount of money they did. I would say 1% of the money they spent on their solution. And that means that if we have a breakdown, we can have a second piece of equipment right there that can be swapped fairly quickly. And while we maintain on it, they had solution in the millions of dollars that requires a lead time for remanufacturing or for maintenance that's in months, not in days. So I would say the fact that we were very limited in terms of financial resource to put this together had forced us to be imaginative and to question every single modules as, is this going to be profitable down the road? Is this a drain on finance? What happens if we need to, what will be the cost of maintenance on it, and the frequency of maintenance, and how can we operate still while being in maintenance? That was constantly what we were looking at, and that's basically the gist of it. Is that we had a very limited budget, so we had to be thrifty, if not cheap, in terms of the solution, and we had to come up with the cheapest possible solution. So OPEX and CAPEX was constantly something we were focusing on, not how much money we're going to make in 10 years from now, but can we make money from this right away, right now? And can we keep this in production? Can we keep this line going and have limited maintenance on it? And that's, I think, the reason why we're still there.
Well, it sounds like after all of this very careful, very considered R&D, that you're at quite an inflection point where things are really going to start moving in a business sense for EVSX.
I would say by the time that you have this interview out, you'll know that, I don't run this subsidiary. We have very capable people in place that are running it. And via St. George Metallurgy, we have some collaboration back and forth in terms of fine-tuning things. But they've really, harassed equipment manufacturers and even shops that can customize equipment, and they kept this thing really within budget. And they've started to run the line in last summer, and then stop to upgrade and then do some small runs. They will have, and they will announce at the end of this month, we have our interim financials coming out for St. George. So people will see the first small crumbs or small first amounts of revenue coming in from that subsidiary. So yeah, that's the inflection point from basically a concept of an idea, a concept of a plan, like somebody else would say, in the first part of 2021 to today. We're at a time where we're, a few days, a few weeks from full operation with no shutdown for upgrades. To be candid, there's part that have been upgraded that would have made this multiple times more efficient. And as they test run the line, they realize, oh, okay, there's other modules that will require upgrade based on the upgrades that the first modules in the line had. And so that's part of the learning curve, but we're there. And now it's probably getting the resource to really operate this as a full-time operation, multi-thousands of tons per year, and eventually having a profit engine in the constellation of subsidiaries.
Frank, with all sorts of investors really interested in closing the circle on energy production and various green technologies, I think that EVSX, this battery recycling component of the business, is just going to keep getting more interesting.